This is Dustin with Dustin's Dollars. Today, I'm going to be talking about Venture Global, an LNG exporting company that is about to IPO this week, I believe, on the 24th, although I'm not 100% sure. I don't know that they've disclosed that yet, but I believe that is when it is planned. So that is what I'm going to be talking about today. And give a quick overview of the company, what they do, and go through the financials and give my opinion on some of the valuation after I, give you all the information. Before I begin, though, let me remind you that I am not a financial advisor or a financial professional of any sort. All opinions that I express in this video are mine and do not represent those of any company or any other individual. I do not hold any position in this company because it isn't yet public. So this video should be for entertainment purposes only because I could be wrong about everything that I say in this video. You need to do your own research before making any investment decisions. Hi, Transient Stacker. Thanks for hopping on the stream. Talking about Venture Global LNG today. And hopefully I think a lot of my audience is familiar with LNG. That's liquefied natural gas. Just a 30-second summary on LNG. It is natural gas that you'd use to heat your home or burn for electricity. When it's liquefied, you have to cool it down to a very, very low temperature, something like negative 200 degrees Celsius, I think. It's very, very cold, so it requires these specialized facilities. These LNG export facilities are basically the ones that liquefy the gas. And the reason they liquefy it is because it gets much, much smaller. I think it's 1/600th of the volume. And so they can pack a lot more of the gas in a smaller space. And then they get to load that on ships, and then they can ship the gas elsewhere in the world. So it makes it actually economical to move natural gas around because it is so much smaller. They can actually ship a good amount of it. If they shipped it in just the gaseous form, it would cost so much to ship it that it's not economical. So that's generally what LNG is, and it's not easy to cool things down to those very low temperatures, and that's why there are these specialized facilities that actually do that cooling, do the liquefaction. And Venture Global is one such company. There's only a handful of them in the world. I mean, I don't want to misrepresent and say that there are very, very few, but there are. It's not a humongous market. Some of these companies themselves might have single-digit percentages or maybe even double-digit percentages of the entire global LNG market. Probably more along the lines of single digits, but the point is that this is a specialized thing. Venture Global is a player in the market, and in fact, I believe they have. I'll go through their facilities and what their current capabilities are. So, real quick, an overview of the IPO, what they're offering here, because that's relevant details. They're going to be trading on the ticker VG. You can see this right here. They're going to trade under the symbol VG on the New York Stock Exchange, and they are trying to raise. They're trying to sell 50 million shares of their Class A common stock. They want to price it between $40 and $46 per share. I'm going to go through some of the details of all the shares they have outstanding, but that's going to value the company somewhere around the $100 billion mark. And I'll get into more details in just a little bit. But that is to say, this roughly $2 billion that they're trying to raise represents close to like 2% of the company. Again, those are rough numbers, but I will get to it. So Transient Stacker says, next decade is doing good. Yes, it is. I don't think they're 100% through all the regulatory stuff quite yet, but I do think that the current political climate makes it incredibly likely, and that's what the market is responding to. When is the IPO for Venture Global? I believe it's going to be this week. I don't think it's officially determined for any particular date, but I should have had that open. Venture Global, if I can speak, global IPO. Let's see the NASDAQ. Actually, you know what? Let's go for IPO listings. NASDAQ. This is where I believe there's a schedule that has the current best estimates, and I believe Venture Global was listed. Even though they're not listing on the New York Stock Exchange, the New York Stock Exchange doesn't provide something like this. But this is where I got the date, expected IPO date, 1/24. 2025 for Venture Global. So I believe it's going to be this Friday, I think. So fairly soon. Going back here and giving the overview, right? They're looking to raise at a $100 billion valuation, which is humongous. And so that's kind of an overview of the IPO. And so now let's go in and look at the company themselves. And so, by the way, all this information I'm getting is from their S1 filing. You can get this. It's on the SEC, website. It's just, there's a lot here. It's, I don't know, 300 pages or so. And I've read through substantially all of it and tried to condense it down into what I thought were the most important details. But if you're considering investing in this company, it's a pretty good idea for you to read through this yourself. So, all right, let me go through some of the details of this company. All right, so they have, if I can scroll down and get to where the content starts here, they have 5 either current or planned projects. And they have this nice table right here. It might be a little small even for you to see. I'm going to walk through them real quick, even if you can't quite read it. They have the Calcasieu project. This is a 10 million ton per year of LNG. That's the nameplate capacity in terms of how large the facility is and what it's able to export. And that is currently in the commissioning phase. And so this is currently producing LNG. I'm going to talk about this one in a bit. It's still in the commissioning phase, but I believe it's actually producing roughly 10 million tons per year or something very close to it, right? It is producing substantial amounts of LNG. There's some controversy around this, and I'll go through that later on. But that is one of their facilities that's already substantially built with a major asterisk next to that one. There's also the Plaquemines project. This one is 20 million tons per year. And that one is currently in construction and commissioning. And I'm going to go through a little bit about why they're sort of in both phases in a moment. Then the CP2 project, that's also 20 million tons per year. That one is, I think they have an FID on part of that. And so they're in the early, engineering and procurement phase. But that is not necessarily, they may not have an FID in that. Sorry, let me back up on that. And we'll go through in slightly more detail later on in this presentation that has that. And it's slipping my mind right now if they're actually have reached the FID on that or not. They have some sales agreements that I think pertain to that project. And they have the CP3, which is 30 million tons per year, and the Delta project, which is 24.4 million tons per year. Neither one of those are at any level of completion, right? They're just concepts at this point. They do not have even LNG sales agreements in place to even start talking about reaching a final investment decision. Sorry, I'm saying FID. If you're not familiar, that's a final investment decision. It's when the company has everything lined up, all the sales and enough of the engineering and all the financing that they can finally make the decision and start, get the loans and start the construction on everything. So those last 2 projects, the CP3 and the Delta, are very far in the future. The CP2, I believe they have, they at least have some sales agreements. I don't know if they actually have anything FID'd yet or not. But that's an overview of their facilities that they either have underway or have planned for the current company. Now, one thing I will call out here that is something that Venture Global emphasizes that I haven't seen in other LNG companies, and that is this distinction here between their nameplate capacity, which is what I just talked about, and also excess capacity. And so basically, this is one of the strategic points I'll talk about for Venture Global. They have this strategy where they say, you know what, we are going to contract out these facilities basically 100% for sales agreements for LNG, long-term agreements on the nameplate capacity of our facilities. But our facilities, the nameplate capacity is basically what those facilities are guaranteed to be able to produce by the manufacturers of the equipment, etc. But then there's this excess capacity, which is what those facilities ought to be able to produce in, over and above the actual nameplate capacity. So that's an interesting thing that Venture Global has in their favor. And so this is sort of part of the bull case for the company, and that is that in addition to what we have contracted through our long-term agreements, we think we can produce even more over and above the nameplate capacity most of the time. And we believe that we can sell that into the spot market or with shorter term agreements or specifically structured agreements that may, not have guaranteed delivery of the LNG and make money based off of those. So that's something just to really note and to dig into if you're interested in the company. And now one thing that is interesting, I talked about this with the commissioning for Venture Global. They have one of the things that they do, and that they emphasize this right here. They're very they're not shy about saying this, and that is the chart may be a little bit small for you to see. It's even small on my screen to actually read the text, but the point that they're making here, they listed their projects, the Calcasieu project and the Plaquemines project, as these darker blue bars here. And what they're emphasizing here is what was the time from when they actually reached FID until they started exporting their first LNG, their first cargo of commissioning LNG. And this isn't necessarily when, construction was complete and when they were ready to actually produce all of the LNG that facility ought to be able to produce. But this is, excuse me, this is the point at which they were able to start shipping some LNG and selling that to somebody. And they emphasize that they can do this much more quickly than other LNG projects that are, sort of peers. And partly this is because of their designs where they say, some of these bigger ones, they have these, they're for a comparable facility. This Calcasieu project, for example, says 18 trains. It produces 10 million tons per year of LNG. And so they're installing 18 different units that do the liquefaction. That's what the trains are. That's my understanding. These larger projects or peer projects are using much larger units. And so the number of trains that they have there, the number of sort of liquefaction or cooling, actual units that they have, that they might have for a similar project, instead of 18 trains, they might have 4 or something. And so the point is that they are deploying much smaller chunks in the design of the Venture LNG facilities, and because of that, they can start, they can get their first one up and running quickly while they still are deploying, let's say, the other 17, deploying and bringing up and getting all connected, right? And so they can actually produce LNG during this commissioning phase, because all the way up until they actually get that 18th unit up and ready and qualified, they can be producing LNG from the other ones as part of that commissioning phase, and they can sell that LNG and pocket the money before their long-term sales agreements for LNG from the facility kicks in. So that is one big part of their strategy here. I also want to call out, and I'm going to scroll all the way down to page 30, that they do these, they're contracting LNG out at the nameplate capacity on long-term, they call out 20-year sales and purchase agreements for the LNG, usually at a fixed, what they call tolling fee price. And so I'm sorry, I'm almost to page 30 down here. Right in here, they do talk about, that generally our customers pay a fee equal to the, fixed facility charge per MMBTU plus an amount equal to, depending on the applicable SPA, 115% or more of the Henry Hub price, right? And so basically, and then they, on top of that, then they have, they have the Henry Hub fee plus the 15%, which is meant to cover the cost of the feed gas and the transportation, basically getting all the gas to the Venture Global facility. And then that's where they pay, the customers of Venture Global are paying a fixed fee per MMBTU for every chunk of gas that gets liquefied, right? And so Venture Global is going to make money, is going to make that profit, that tolling fee, for as they are liquefying the gas, regardless of what the price of natural gas is in the United States where they're sourcing the gas, right? Whether the gas is down at $2 an MMBTU or whether it's $40 because of some crazy thing, right? Venture Global just passes that cost right through, and that 15% that's added on is meant to cover the shipping of the gas. And so in general, Venture Global is going to have net, sort of like gross profit, you might say, from that fixed fee that is on top of the 115% of Henry Hub. And so that's pretty standard in the industry if you're familiar. And one of the things that I would note is that in this S1, they do not disclose how high their fees are that they have these contracts set at, right? I think it's in recent years, somewhere in the $2.50 to $3 range has been, I believe, roughly standard. And so I have a model that I'll go to in a little bit that does guess at some numbers, but they do not disclose it here, so we really have no idea. And I do not believe that we can infer it from any of their prior profits, because their current profits have not been under these SPAs. They've been from those commissioning cargoes that are sold under different agreements. So we really don't know what those are. And to my knowledge, they haven't disclosed that anywhere. So that's a little bit frustrating as an investor of the company to not really even know what their potential profits might be, or what their fees are that they have these sales agreements signed at. Maybe I totally missed it somewhere, but I didn't find it when I read through this S1. Anyways, I just wanted to really call that out, and because that's a really important detail to understand. How is it that they're pricing their sales? They're not selling it at spot, so you can't look at it and say, JKM prices are way high, for the next year because there's some shortage in Asia, and therefore Venture Global is going to make bank on that. They might with some of their sales that they're able to do at spot prices, but the vast majority of the LNG that they produce, again, all of that nameplate capacity is basically going to be, once the SPAs kick in for each facility, they're going to be just collecting that tolling fee. They're not going to be getting all that upside of, the commodity pricing. So one other thing that I did want to call out here, moving on past even just their exports, is Venture Global has a little bit of a presence in a couple other areas, 3 other areas, which they have a little more details in other places. I'm only going to summarize it here, mostly because they're not huge portions of the business. And so I'm not going to spend a whole lot of time on them, but I do want to call it out here because, these are other things that the company owns and operates. They have a little bit of pipeline. Again, they own about basically one pipeline, and I believe they own 50% of it. Maybe I'm misremembering that, but I think they own 50% of this pipeline, which is a 190-mile, 48-inch pipeline. They own some LNG carriers, or they have some ordered, let me say, and I think they're going to be getting delivery of those fairly soon. And then they have 4 more on charters that presumably these go along with some of their sales agreements that they have for LNG, or they're at least used, as a hedge to what they would have to pay third parties to actually ship their LNG to customers who don't want to deal with that themselves, right? Customers who just want the gas to show up on a ship, and they don't want to have to try to say, hey, I'll buy the LNG from you, Venture LNG, but I'll also line up, a carrier to ship the LNG from you to me to where I need it. Venture Global does actually, or plans to have some ships and has them ordered, and is able to sort of own and operate some of that LNG shipping themselves. I'm not quite sure that's the best idea for the company, but that's, really, I didn't worry about it too much. It's a small portion, both in terms of the upside and the downside for the company, sort of the pros and the cons. I think they're small in comparison to how large their LNG export facilities are. So I don't worry about it too much. Similarly, they have a little bit of, the tiny foothold in some regasification, right? And this is actually on the other side of LNG once it's been liquefied, loaded on a ship, and, driven to wherever. The gas is going to then be turned back from this liquid back into a gaseous form. That's called regasification, and that's what needs to happen so that the people on the other side of this can actually, have gas that they want to burn. And Venture Global has a tiny, tiny bit of regasification capacity. I'm not going to go into any details with this. Again, it's a very, very small. It's a very, very small operation compared to the magnitude of their LNG exports. So I'm not going to spend any more time on any of these, but I did want to call them out for the sake of completeness. If you're interested in this company and thinking of investing, those are additional areas that you might be interested. You might see upside there. You might see value, and you should really dig in and understand those things, I think. All right, moving on. I'm going to go through a couple different things just to call out. Some of them I've already talked about. What Venture Global believes is their competitive advantage or their strategy that they're using for their company that might differentiate them from other LNG exporters. One thing I already mentioned is their difference in the train size, right? They have smaller trains. They believe that gives them, as I mentioned, kind of 2 opportunities or 2 advantages. One of them is that they are able to they're able to manufacture those units at a sort of like and have them fully assembled rather than bring them piece by piece, and then they get to ship them over and sort of set them in place. That's one thing that they talked about. Another one is that I already mentioned, they're able to, once they get the very first one of these smaller units up and running, they can start producing LNG from that while the other ones are still being deployed. And because of that, until all of them are deployed, they're still in this commissioning phase, so none of the sales and purchase agreements sort of kick in, and they're able to sell that LNG in addition to what they're later able to sell under the sales and purchase agreements. And when they sell those, they can get whatever the best pricing is at that particular time, rather than having to sell it just for the fixed tolling fee. And sometimes that can be very lucrative, because if they're selling at JKM prices that are $14 per MMBTU, you get feed gas that's $4. On top of that, that's a $10 spread. You can subtract off a couple dollars per MMBTU, but they might still be making a margin of, let's say, $6 or $7, as opposed to some of the tolling fees that are closer to maybe like $3. So that can be lucrative. Another competitive advantage that they talk about is they talked about, and I didn't go through it yet, having bolt-on opportunities at their site. And this is one thing where they basically say, we've got these sites and we've got all these facilities that we say they have a certain amount of export capacity. Let me go down. Sorry, I went to the wrong page. There's a chart that shows at each facility roughly how much additional space they have, additional capacity based off of, feed gas, internal pipelines, those sorts of things, where they believe that they could actually deploy more of these export, units, these trains at existing facilities for a very, very low cost per, much lower capex, right, per million tons per year that they can actually export. And they have this listed out here where they have, between 4.5, 8.9, 14 million tons per year worth of capacity, where they might say, hey, if we can get the permitting, we can, go through an entire different, project development life cycle to get to the point where we have these additional export units on existing sites that are going to be much, lower, cheaper for us to do because the site already exists, lots of the infrastructure is already there. So that's one thing that provides upside potential for this company. Another one is, and I already talked about this, is the ability to have these commissioning cargoes. And this is very substantial, incredibly substantial, to the point where, and I'm going to go up here to say, none of the long-term sales and purchase agreements have actually kicked in yet. However, let me get the figure. Yeah, by September 30th, 2024, again, this is the first facility that has not yet, this is my preamble, has not yet reached the point of being, fully qualified or whatever it is that actually causes the sales and purchase agreements to kick in. They've been able to load and sell 342 commissioning cargoes and have made just shy of $20 billion in gross proceeds from those, right? This is, again, before any of their long-term sales and purchase agreements have kicked in. They've been able to produce and sell LNG on the spot market with other shorter-term agreements and bring in quite a bit of money. And they call this out as part of their competitive advantage. And now's as good a time as any to sort of say, there are customers that are not very happy with this, right? They signed these agreements years ago, still wait, even by this timeline that they are touting and saying, hey, we can start producing LNG in 2.5 years. That's when they produced their first cargo. These folks, this FID happened in August of 2019 for the Calcasieu project. It's 2025, and they're still waiting to get their LNG, even though Venture Global has been producing LNG from these units for years. Without going into details, my understanding is that they basically had issues with the equipment that made it sort of unsuitable. It was a manufacturer's issue and it was unsuitable to actually sort of guarantee the nameplate capacity, and therefore, kind of as the contracts are written, they aren't yet at this point where the sales and purchase agreements should kick in. And so therefore Venture Global said, hey, again, I'm majorly paraphrasing, but I'm trying to summarize it here. Venture Global said, we still have to be in the commissioning phase because the manufacturer's equipment didn't live up to their standards. This is even a force majeure event, meaning like we're going to kind of change some of the terms that usually wouldn't be able to. And they kicked out when the sort of the date was that folks could make, changes to their sales and purchase agreements, like cancellations and such, all the way out to June of 2025. Meanwhile, Venture Global has been producing LNG and shipping it and making a ton of money. And the folks who sign these sales and purchase agreements are not very happy. And this is something where I guess I can go down. I was going to go through the risks later, but I'll go talk about it now. There are lawsuits going on right now from those customers. I'm going to go down to page 78, if I can get to that one here, to get a quick overview where you can see here. We are involved and may in the future become involved in disputes and arbitration proceedings with the customers under SPAs. And they say, for example, In December 22, a long-term customer of the Calcasieu project submitted a request for arbitration. Oh, sorry, my battery's running low. Thanks for that. They submitted a request for arbitration, with the International Chamber of Commerce, and they're basically because they're, for better, to simplify it, the issue here is that they haven't yet been receiving the LNG, even though Venture Global has been producing it and selling it. And they're seeking damages. This customer is seeking damages of, in excess of $1 billion. Then there's even another one, right? 2 additional long-term customers separately submitted requests, to another international arbitration court. And they are also requesting damages, $1.5 billion and $1.7 billion, right? There's even more down here. And so the point is, quite a few of the customers of Venture LNG that they signed these agreements with are in lawsuits with them to collect damages because Venture Global basically hasn't lived up to the spirit of what the agreements were. They may have met it to the letter of the law, but not in the spirit of it substantially. And so this is a humongous risk. And I think that's something that they call it all the way back up here. If I was talking about it in Venture Global's filing, they're calling it out as a positive, as a strategic advantage that they're able to produce all these commissioning cargoes that other facilities may not be able to. But I'm not sure that this is something that's going to last, past the future facilities. And so I just don't know that that's actually something I would count on. Now, just while I'm at it, I'll mention a couple more risks here before I go on to kind of the share structure of the company. One that they call out here in their filing, that is one I think we should be particularly cognizant of right now, is they may face tariffs. I can't find exactly where it is, but there might be tariffs. There actually were tariffs on LNG a couple of years ago on LNG imports, into China, and that had an impact on some players in the industry. And with the new administration, they talk about tariffs a lot. That's definitely a risk. This could impact the LNG industry. One other thing I want to call, I'm going to go through the share structure next. And so let me see, what page should I go to here? All the way back up to page 14. I'm going to be brief about this, but I do want you to understand this. So currently, well, let's talk about after this offering. So this might be a little small, but you can see here, after this offering, public stockholders are going to hold 11.6% of the Class A common stock. There are other existing stockholders that are going to hold the other 88.4% of the Class A common stock. And then there's this Class B common stock that is only held by Venture Global Partners. I believe this is basically just an organization, LLC, that is owned by the 2 founders of the company. They're going to hold this Class B common stock, which is convertible into Class A common stock on a 1-for-1 basis. But it has super voting power. So basically, the Class B common stock, holds 98% or something of the voting power of the company. So the Class A holders are basically not another risk that I would call out. And in terms of the share count, let me go and go through that. Just that's back down here on page 16. Right, so there are currently, after this, post the offering, because they're doing some weird stock split with their existing shares, but basically there's going to be almost 431 million shares already outstanding of the Class A common stock, and then just shy of 2 billion shares of Class B common stock already outstanding. And this is why up front I said, this offering, this 50 million shares, is about 2% of the company. And that's where you get this valuation that even though they're raising $2 billion, the valuation is about, $100 billion here. And one other thing I would call out is that if you go down and look even a little further onto page 18, they talk about there are stock options that are outstanding, if I can find the number, for 289.7 million additional shares of Class A common stock that are going to have an weighted average exercise price of $1.41 per share. So for me, because the cost basis is so low, $1.40 versus the $40 that they're looking to IPO at, For me, I just go ahead and count that in the share count for the company. Because those are almost certainly going to be exercised. All right, sorry, my laptop is getting low. For this, I did not plug it in. I really should have. I'm going to try to go real quick through the rest of this. But that's where, if you add all that up and you include the employee stock, I count that as 2.7 billion shares roughly for the company outstanding. And so that really, once you do the math, between the lower end and the higher end of their pricing, meaning $40 or $46 per share, that gets you to a company valuation between 107 to 124 billion dollars, which is huge. In comparison, that's about double the market capitalization of Cheniere LNG, which is currently producing 45 million tons per year of LNG. And again, there are differences, right, in how they are selling it, their pricing, and all sorts of stuff. But it's just a point of comparison, right? That already kind of foreshadows what I'm going to say, which is that that's a very, very high valuation. I will also mention here, if you read through, you'll see that they've been paying some dividends, and they intend to continue paying 2 more dividends, but they have no sort of forecast after that. So if you go to page 101, you can see that they paid these dividends of $40 million per quarter. They declared to do that for 4 quarters, and they've already done 2 of those. So there are 2 more remaining, one at the end of March and one at the end of June. You can see that right here. And if you divide that out on a per share basis, I think that comes out to about 1.6 cents per share per quarter, which would be about 6.7 cents per year, which is about a 0.15% dividend if I did my math correctly. So that's the annualized rate. And so there is going to be a dividend at least for the next 2 quarters. Past that, they don't necessarily promise anything. All right. Going to the financials of this company, I'm going to go to page 103 with their pro forma balance sheet here, just so you're aware, and say, after this raise, I think this is assuming a $43 per share pricing, they're going to have $6.6 billion of cash on their balance sheet. But at the Venture Global LNG level, right, the sort of the entity that we're all buying stock in, not the project level debt that might go along with this project or that project specifically, they have $11 billion of debt. So right off the bat, you can see they have debt, that they don't have a clean balance sheet, that they're coming in with $11 billion of debt and even only $6.6 billion of cash. So they're more debt than assets, or than cash at the moment, let's say. And they do have their statement of operations. I'm not going to go over that, mostly because they've been selling their current LNG at those commissioning rates. And I think once that's over, you're going to see the price that they get and the revenue they get from that LNG drop to the price that they're getting from these long-term agreements. So I personally sort of do not worry about what is the revenue from that they're getting currently. I just think that that's not realistic and not representative of what they're getting in the future. So trying to go through this fairly quickly. Let me go through this model real quick that I built for the company. Let me see where I'm at. I'm going to have to end this very quickly. It says 11 minutes remaining, and I'm going to try to not run the battery out. So I apologize for this. Anyways, I made a quick model based off of their capacity on a per project basis and when that capacity comes online. And so the first project that they have, I assume is going to come online this year for the Calcasieu project.